Well, for the moment at least, we're back to situation normal. Up one day, down the next. The US market went up 1% yesterday. It was down 0.75% today. And the big falls were mostly technology and AI companies, as usual, except for Airbnb, which dropped 13% after disappointing results. In fact, Airbnb share prices collapsed. It's down 32% since March to a 12-month low, which is a good demonstration of the market's short temper these days. The growth in Airbnb's bookings has fallen, but it's still growing. The Australian market lost 0.3%, miners down, banks and supermarkets up. Aussie shares have performed better than American ones over the past month, down only 2% versus Wall Street's 8%. But that's pretty unusual and due to the fact that we don't have many technology stocks. But it's a long way back for this ratio of the Australian index to the S&P 500 in New York, which has been declining since the second great US technology boom that began with the launch of the iPhone in 2007. But has this correction finished now? Well, on one measure, probably not. Markets don't usually bottom until they've broken under the 200-day moving average. But maybe this time is different. The big move on foreign exchange markets this week was the yen, after the Bank of Japan buckled under intense pressure and said it probably won't keep raising interest rates, which meant that both the US and Australian dollars jumped against the yen. And finally, the oil price increased 2.7% on commodity markets today. And that's finance.